Hello viewers, in this video I'll be going over WTI crude oil, ETF ticker symbol USO. Today we are down 1.4% and we have about 1 hour left in trading. On the 1 hour chart we are approaching negative MACD, and on the 4 hour chart we saw a divergence on the MACD and we are soon to point downward, and we also see a large volume spike in the past 4 hours. And this volume exceeds past several days, so keep that in mind that this is a very heavy selling pattern. And on the daily chart we do see the daily MACD turning positive, but there's some concern. What I see here is the 200-day moving average and the 150-day moving average act as resistance today, yesterday, and 2 days ago. So that is a good sign that this is a very strong resistance and we may head down lower in the next coming days. So at the moment I do see a possible support level around I will mark it as the 18-day moving average. That will be our next possible support. Reason why, so let me draw a trend line. So far it's been acting up as a support that dated back to early October and bounced off in mid-October or October 21st, once again in October 31st, the last day of October, and then possibly we may head down lower to touch and test that resistance again. So by that time the 18-day moving average shall meet at that point, and that is around $11.50. As for resistance, I do see the 150-day moving average, this red line, acting as our immediate resistance. We do need to break above $11, or I should say $12, above several days in order to confirm that this is not a blockade in hand, and we may continue on higher once we breach the resistance for several days. So if we were to move on lower, that price movement is roughly around 2.2% to the downside, and if we were to move on up and continue to breach the resistance, that is about 1.9% to the upside. So let's head to the forecast model. So the forecast model is now available in the link below, so check it out. So just click one of these and you'll be prompted to configure the settings. It's easy. Again, you can try it out for free. It's in the link below, so check it out. So back to the forecast model. I'll go day by day, where the WTI crude oil will head to the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. We have the current trend right here, and below is the trend that I believe is the best match to the current trend. And this trend dates back to January 2nd to April 1st, 2013. So let me point out why these two charts are similar. So what we have in the beginning of the trend, we started off touching the upper Bollinger Band, and then we proceeded to break down lower, and touch the bottom Bollinger Band as well. Next we made a nice reversal and touched the upper Bollinger Band right towards the very end. So we have those points, so keep in mind. And on here we see a similar pattern. We see it touch the upper Bollinger Band right at the beginning of the trend, and then we proceeded to break down further, touching the bottom Bollinger Band, and right towards the end we see it touch the upper Bollinger Band. So we have about 1, 2, 3 points, and we also have about 1, 2, 3 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So again, the trend that we just examined was January 2nd to April 1st, 2013. Back then, WTI crude oil was down roughly around 1.5% to the downside in the next coming days. So it looks like we may touch the 18-day moving average back in the technical analysis. And this forecast model is now available in the link below, so check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.